Hey fellow traders, welcome to a new trading week. So in this video, this is a market outlook video. So I'm going to give you the bias for the week for the various currency pairs, provide you with the key levels so that you can better trade the new week ahead. Now, I'll be going through the following currency pairs. So if there's a particular currency pair that you like, you can actually fast forward to that currency pair that you want to focus on. Now, as always, for this analysis, I'll be using the MPE trading strategy, which stands for market condition, price level, and entry trigger. Now, if you have not gotten this PDF, it's totally free, and there's a lot of valuable information in this. It's almost 33 pages long, and this is totally free. So if you have not gotten this, you're new to the channel, and you have not read this guide, then please download it. I will leave a link in the description down below. Okay, there's no catch, it's totally free. So let's jump into the analysis. So the first thing that we always do is that we look at the Forex calendar. Why do we do so? Because we want to know which are the currency pairs that could potentially move, and also what is the likely market condition going to be. So let's look at the market economic calendar for next week, which will be the 21st of February to 26th of February. So you can see that there's not much news. The only thing that you have is really the NZD, the Kiwi, okay, and this one on Wednesday, USD. So it's rather a light week, and I would expect that the market will be much easier to trade, and also potentially Kiwi could be a very good candidate for you to focus on. So let's go into the charts. So as I mentioned, we will be using the MPE strategy to analyze the market. Okay, so as a very quick refresher, M stands for market condition. You know, is it in a bullish or is it bearish? Price level, we need to identify the key levels which we want to enter on. And lastly, we need an entry trigger. Now, obviously, I cannot identify for you an entry trigger right now because the market is closed. But what I can do for you is to go ahead and show you the market condition and the price level. And during the trading week, when you see a confirmation candlestick pattern at the key levels, then you can go ahead to take the trade. So let's talk about euro dollar. So last week, I did an analysis about euro dollar, and I said that it's in an uptrend. Okay, so it's still in an uptrend, and right now, these are the three key levels that you should focus on. So over here, you can see that this level over here actually corresponds to this low, this low. This one over here corresponds to this high and this high, and this one is of course the recent swing low. So you can see that in the long term, it's uptrend, and ideally you want to be buying. Okay, but right here we are kind of like in a range. So technically, you can sell at the resistance and buy at the support. But I would recommend to lean towards the bullish setup, which in this case, either you wait for price to come down lower. Let me just draw it first. Okay, either you wait for price to come down here, or you wait for price to break above and then come back down to retest the support. So this is how I would trade it, but I will not trade it at the current price because you are in the middle of nowhere. Right, price might bounce off here, you do not know, or it might just go straight up. But either way, it's not a good setup unless you wait for price to be at the bottom or for it to break out at the top, confirm that the trend is going to indeed resume its bullish trend, and then wait for it to come back down. So not a very good candidate for you to trade, but nonetheless, these are the three key levels. Now, pound dollar is much clearer, as I mentioned last week. Pound dollar is a buy. It's very obvious buy because you have a swing high, swing low, higher low, higher high, higher low, and so on and so forth. Okay, so please do not attempt to short this at all. Okay, if you are still struggling to turn a profit, then please focus on trading with the trend. Okay, go for the easiest money. Go for the easy trades and just really build your confidence and make some money first. Okay, so with that being said, this is an uptrend. And there are two key levels that I want you to focus on. It will be the 1.38547. You can see that over here, what happened was that a price broke above and retested. So this is a very nice level. And also you can see that there's a nice engulfing candle off this level over here. So if price comes back here, look for a candlestick pattern to take the long trade up. Very simple setup. Or if price, let's say, does a deeper retracement, then you have to look at this level, which is given by this entire zone of resistance. Now, be careful though, because if price drops down to here, and it might retrace a bit, and this might become a resistance. Okay, so just remember that support and resistance are interchangeable. So right now it might function as support, but once broken, it might serve as resistance. So if you choose to buy here, if you see an entry trigger here, then just be careful that there's resistance here and price might actually do this. So just be careful. If you do a quick trade here, look to take your profit here. If not, the other scenario is a price bounces here and you get to ride the trend. Okay, in the ideal scenario, that's what I would prefer. But this is just the two scenarios that I see at this moment in time. So moving on to the dollar franc. So this dollar franc, this was the analysis done last week. Okay, so if you have not watched the previous week's video, you can check that out. But this was the exact analysis done. So I mentioned that there's actually an inverted head and shoulder over here. You have the left shoulder, you have the head, and you have the right shoulder. You have a low, high, higher low, and higher high. So price is in a uptrend, at least in the short term. In the long term, it's more of a downtrend. But the immediate trend is an uptrend, and we want to buy. So what happened was that I predicted that if price breaks this level and comes back down nicely to test this level, then we get a nice entry. Now let me just clear this off so that it's clearer. You can see that price did indeed break this level, 0.8917. Okay, but right now price is still somewhere around here. Okay, so perhaps if you can just wait for it to come down a bit lower and look for a candlestick pattern here, then that would be a very good setup. Now, if you choose to buy, then your next take profit will be somewhere here, which is the recent high. And if you were to look to the left historically, you can see that this is a very strong level. So it's still a good setup because the risk to reward would probably still be quite attractive. Let's say, assuming you come in something like here, you put your stop loss below the low and you target here. You still get a risk to reward of 1:1.72, which is pretty okay. So this is how I would trade it. Now move on to the Aussie dollar. So Aussie dollar, last week I also warned that long term is an uptrend because you have the high, low, higher high, higher low. So it's an uptrend, but we were at resistance previously. Now on Friday, we had a very nice bullish close. This is a very strong close because on Friday it closed near the top. So you can see that the wick, the higher upper wick is very small. So this is a very strong candle, but please do not chase the market because the price is very high now. So what you can do is wait for a retracement down here and look to buy it up. Okay. Now the other level I have for you, the secondary level would be this level here. Okay. How did I get this level? If you look to the left, what you will see is, let me just draw it. It's a left shoulder, head, and potentially a right shoulder if price were to come down here. So this is how I got the level. So these are the two levels that you should focus on buying. Okay, and just like the pound dollar, please do not attempt to sell the Aussie dollar. Okay, at least on the day chart. Okay, in the day chart, it's in the uptrend, and there are two key levels that you should be buying off, not selling. So moving on to the Kiwi dollar. Kiwi dollar is not as clear as the Aussie dollar, okay, because if you look at Aussie dollar, it cleared all the resistance. The entire zone of resistance is being cleared. But in Kiwi dollar, you see over here, you can see that price closed quite high. But if you look to the left, price has not closed above this resistance. Okay, so there is a chance that price might come back into the trading range. So please do not chase the trade. Okay, if you really want to buy, then just wait for price to cleanly break this entire zone and do a retracement down, okay, in order to buy. Do not just chase the market right now. The other alternative would be to buy it down at the bottom of the range over here, okay, because this is still a long-term uptrend. You can see high, low, higher high, higher low. So this is the bottom of the range, and your highest probability setup is to buy at the bottom of the range if possible. Okay, so please be patient. This Kiwi dollar might be a bit tricky, so I advise you to stay away from this if you do not have the experience to trade breakouts. So moving on to the dollar CAD. Now dollar CAD is also a bit tough to trade because right now on Friday, price parked at the support level over here. Okay, so it's a bit hard to trade because you do not know if this level will be broken. And if you were to scroll back in time, let me just scroll back. Okay, you can see over here that there is a support level here as well. So the challenge would be, if let's say on Monday, price was to break this level, uh, by the time it breaks, the candle might be here already. By the time Monday closes, meaning that on Tuesday open, the candle is here, and there's not much meat left in the market because next support is here. So I would advise that if you want to trade this, just wait for the retracement up. Okay, wait for the price to retrace higher here and sell at the high. Okay, do not sell in the support, or worse still, do not sell somewhere here where price doesn't have any meat left, because you can see that the long-term trend is still down. Okay, so you definitely want to sell and you don't want to be buying here. Okay, I know a lot of traders, a lot of subscribers, they want to buy here because they say, hey, look, this is a support. You tell me that this is a support. Can I buy here? Well, technically you can, but this is a very low probability setup because the long-term trend is down. You see a low, high, lower, low, lower, high, lower, low, lower, high, and so on and so forth. So go for the lowest hanging fruit. Look for the sell opportunity rather than to buy at the support. Okay, so let's move on to dollar yen. Now, dollar yen is a bit tricky because you can see that the long-term trend is kind of more towards the downside. You have the high, low, lower high, lower, low, lower high, and so on and so forth. But in the recent trend over here, since kind of like January, you see that there is a high, there's a low, there's a higher high, higher low, higher high. Okay, and what happened last week was that there's actually a fake out. Okay, so what is a fake out? A fake out is when a price closes above the level, and instead of resuming its trend as it should, it actually breaks down. So this means that this is a fake out. So this dollar yen is a bit tricky to trade, and I think you have to be very careful. So if you really want to trade it, my advice would be to wait for price to retrace to the recent low here and buy it up. Okay, but if you do decide to buy here, just be cautious of this level over here, because what will happen is that this will look like a head and shoulder. Okay, let me draw it out for you. This is the left shoulder, this is the head, and if price were to go down and come back up, then this will be the right shoulder. Okay, so you can go ahead to buy this level, but just be sure to go out quickly to get out of this trade quickly. Do not hold it and expect price to go all the way up, all the way here, because this is a very strong level. Okay, let's move on to gold, XAUUSD. This is gold. Last week I mentioned that gold is actually very difficult to trade because it's in a range. This week, still the same. Okay, you can see that price broke down below this support, but there's actually a lower support over here. And a lot of people, what happens is that they try to chase a breakout over here, and they don't take into account the fact that there is a lower support over here. Okay, just let me adjust it properly. This level over here. So what happens is that they are stuck in the trade right now because price is going nowhere. So I would advise against selling in this case. I would advise towards buying actually. So what I would advise is let price come up, break above this this resistance, and wait for it to retest, look for a bullish candlestick pattern, and take the trade and target towards this level over here. So kind of like a mini inverted head and shoulder. So this will be kind of like a bit of like the head, this is the left shoulder, and this is a bit of the right shoulder. So that's how I would trade it. Okay, I would not buy currently at all because we are in a zone of support. If you buy here, there's a chance that price might hit this upper resistance and then start going down. Okay, now if you want to sell, then at least wait for this support to be broken first, and then look for a retracement up, and then look for your sell opportunity. Okay, but in this case, there's nothing to do at this moment in time, so be patient and just wait for the market to tell you what to do. So moving on, let's go into Euro Pound. Now, Euro Pound was the currency pair that I recommended you focus on last week. And in our Telegram channel, we actually got a very nice trade in Euro Pound. I think it was 60 pips. It hit our final take profit on Euro Pound. So this week again, Euro Pound is still bearish. Okay, if you look at the picture, it's a clear downtrend over here. You can see this is a high, this is a low, this is a low high, lower low, lower high, lower low, low high, lower low, so on and so forth. Very clear downtrend. So these are the kind of trades that you want to focus on. The very obvious trades that is clearly a downtrend. Now, this level has been broken. Okay, and the next level that I have for you is actually this level 0.8577. So there is still quite some distance to this level over here. And on Friday, you see that price actually spike this 0.86668 level nicely. So a potential setup for you could be to do it like that on Monday. You place a stop loss just a couple of pips above, and you target here, something like this. Again, you have a pretty good risk to reward of 1:1.75. So I think a trade setup like this is very good. Okay, so this trade actually coincides with the entire strategy. We have the market condition. So market condition is bearish trend because of the lower highs and lower lows. The price level is this level here, as given. If you scroll back, it's over here, price level, and then you have an entry trigger, which is in this case a kind of like a shooting star or hammer, depending on how you call it. But the bottom line is that price was resisted at this level somewhere here. So on Monday, this is a very good setup. If you can go ahead to take this trade, but of course manage your risk, okay? Because no trade can win 100% of the time. Okay, no single strategy can be right 100% of the time. So risk management is critical. If you do decide to take this trade, just manage your risk, and if it's a loss, then just move on. But if this trade is a profit, then that's good as well. Okay, so that's it for this video. Again, I will leave the link to this 3-day trading guide in the description below. If you're not read it, you have not downloaded it, please go read, because this is the best way for you to get started in trading. Okay, it doesn't cost you anything. You probably can finish it in about maybe an hour, and it gives you everything you need to know. How to identify market condition, what's candlestick pattern, how do you read the chart, what are the 4 stages of a price chart. So please go get that. If not, I hope that you trade safe, and I look forward to seeing you in the Telegram channel and profiting together with us. Thanks for watching. I'll catch you in the next video.